Thanks so much for tuning into this earnings conversation with Nazara. The stock is doing really well in trade. The numbers were decent too. If you look at the YY performance, a 70% jump in top line growth. Bottom line on a low base in Q1 has done tremendously well, more than 100% uptick. Nitish Mittersain joins in to talk about how he saw the quarter, the challenges, if any, and what's the outlook for the rest of the year. Nitish, good having you. Thanks for joining in. Hope all is well.
Yeah, all well. Thank you for having me.
Now, the pleasure is ours. Nitish, tell us what went right in the quarter because 70% top line growth was strong. I think esports and probably real gaming did really well, but gamified early learning, as per what Manish has told us in the past, has kind of been a bit of a plateau.
Sure. So I think Nazara has built a very nice multi-growth engine of businesses that can fire and help us grow. Even if we have a challenge in one or two of our business segments, the overall growth doesn't get impacted. And I think that's what we've been trying to build, because as you know, new age businesses, gaming businesses, they can be disrupted sometimes by regulations or technology or changing consumer preferences. And we want to really build a company that's very stable and is able to grow year on year while absorbing these, changes as they happen. And I think that's what we have built at Nazara, and that's what's really driving the growth for us. In this quarter, if you see, we've seen very strong growth in our esports segment, both in our Nodwin business as well as our sports guitar business. We've seen our real money gaming business grow. And while the Kidopia business, which is our gamified early learning business, has been flat year on year, I think most of the Apple IDFA issues have been absorbed by us. We spoke about the price hike. We've done marginal price hike of 15%, which has had no impact on the underlying metrics of conversion, etc., which shows us that there is enough price elasticity in that business, and we can increase price further and kind of neutralize the cost impact or the cost increase we saw last year on the Apple IDFA. So I think we're very happy. The other thing is the ad tech business we got into, which is very synergistic to many of our other businesses, is also doing very well on a standalone basis. And we expect that to continue to grow as well. It's a very large market that we are operating in that space, and there's a lot of headroom for growth. So overall, very happy with the quarter. And I think another very important thing for us at Nazara is driving growth while maintaining profitability. Although we are very clear that enhancing margins at this point of time is not a priority for us, the growth is very much the priority. But we do not want to power growth by burning a lot of cash, by running into losses. That's not our DNA. We've maintained it from day one, and we are very clear about that. So being able to deliver a 70% year-on-year growth while delivering healthy profits and healthy cash flows is something we really like at Nazara, and we intend very much to continue down the same path.
Okay. There's just actually two, three follow-ups out of your first answer. But the first one, the cost per trial, I thought the numbers on a YY basis look fairly elevated. Now, my question is, because of this change in the policies, does FY23 as a year have that impact, and does FY24 therefore become a more normalized because of a consistent base in FY23? How would that shape up?
Yeah, so this is for the Kidopia business.
Yes.
As the cost of acquisition shot up because of the Apple IDFA, and has in the last quarter also increased because we have been doing a lot of experiments with a lot of new sources of customer acquisition to be able to figure out what is the steady state that we can reach over here. The good news is that with the price increase that we did, our LTV or the lifetime value of this customer has also now proportionately increased, which means that we used to operate pre-Apple IDFA days on a 1:2 basis. For let's say every $100 spent, we would earn $200 over a 24 months period. We are kind of back to that same equation, and that means that we can again resume stepping onto the accelerator for growth. We may let another quarter go to stabilize things, but we can at least now clearly see a path of resuming growth at Kidopia. The other good news in Kidopia is that while we face these consumer acquisition issues, and it's not been just us, right? It's been the whole industry, not even just the gaming industry, but the whole world in that sense. The team at Kidopia has really very diligently kept chasing growth in terms of their product offerings. So they've invested a lot of time in making the product stronger, and rather than getting discouraged by the situation and taking their eye off the product, they've actually doubled down on it, which means that as we are emerging out of this issue of customer acquisition, we already have a much stronger product to take to market. So we are very excited about it, and I would guess today that, or I would believe today, that FY24 can actually turn out to be a very good year for Kidopia. We are keeping our fingers crossed and also doing everything we can to make sure that happens.
Okay, I heard you say FY24, right? Which could be a very good year for Kidopia.
Yes, because FY23 we've already done one quarter. We let 1 or 2 quarters stabilize before we, really start scaling up things again, which is why I'm saying FY24.
No, understandable. Just one quick follow-up there before we move on to the other businesses, Nitish.
Yeah.
As the joint MD of the mother brand, it would be imperative for you to try and understand where the biggest bang for the buck comes in. Now, I understand, and please correct me if I'm wrong, that incremental spending on Kidopia for the time being, you haven't gone out and thought of really increasing that. My question to you is this growth that you are hoping for or factoring in, either of the words, really, ignore my lingo, but this growth that you are working with for FY24, does it happen organically, or do you need to, in a normal sense, incrementally spend money on that business in order to get that going?
No, sure. So I think we haven't scaled spends beyond a point this year or even last year, because we wanted to get a unit metrics right. One thing is very important for us at Nazara is to have discipline on the lifetime value versus cost of customer acquisition. We don't like to chase vanity metrics. We don't like to show subscriber growth just for the sake of it. We like to do it only when it really makes sense, right? And that's what we've kind of actually walked the talk in the last couple of years, facing this Apple IDFA issue. Now, going forward, I think since the equation is looking much better for us, the metrics are looking much better, and the LTV CAC is very positive, we will surely start scaling up our spends, and would like to, if we are able to scale up the spends in a profitable manner, there's no reason why we should not do it.
Okay. Now, a piece that I really wanted to understand, and you would probably have gotten the first taste of what it meant, because this whole Battlegrounds Mobile India, and you've done multiple things around it. I believe a live telecast, tie-ups with multiple players. Tell us, what was the experience? Was it indeed profitable from year one? Tell us a bit about it.
I think the Nodwin team has done a spectacular job in bringing new concepts like esports onto mainstream media, engaging in global partners, whether it is Krafton in this case of BGMI, or many other such game publishers and other partners, in really putting together something that's not been done before. The response has been overwhelming. I think the response from the audience was fantastic, and it just shows that esports is the future of India. I think esports as a category, even in the sporting world, will surprise all of us in the next 2-3 years in terms of what it can be. And I'm very happy to see that Nodwin and Nazara together are kind of leading this great opportunity that's presenting in front of us.
So can you share some numbers? How were the unit metrics or other metrics in year one?
I don't have very detailed numbers handy right now with me, but we've put up whatever we could in our presentation.
Okay, it was a very detailed presentation, Nitish, so I found it difficult to go through everything. So I thought I'll at least ask you for some basics about, even if you can't give the exact numbers, how was the response for the first time? I heard you mention that it's been a great response. Some details.
I think what my team told me was that we've seen the online or the TV streaming of this championship, so much higher viewership than many of the traditional sports that have been happening around the same time. And I think this kind of sinks into my belief that in India, over the next 2-3 years, esports has a potential to by far become the number 2 sports in the country after cricket. It may take us some more time to kind of topple cricket, but I think at least as a number 2 sport, we are surely coming there.
Wow, that's a tall ask. I mean, I thought badminton and some of the others are coming there. You are talking about not just reaching number 2, but at some point of time toppling cricket as well.
Yes, why not?
Okay, great. Okay, that will be interesting. That will be great for you as well as a company, but as well as maybe for everybody involved in the gaming piece. Um, the impact on margin, Nitish, and was it largely due to investments made? Because I was looking at it, 13.5 in Q1 versus 19.3. Was it because of investments made? Does it kind of start evening out, or do you reckon this is the number that you would likely maintain for the rest of the year?
I think for FY23, we are very clear. Our guidance is 12 to 13% in terms of EBITDA margins. Our thinking here is that we need to continue to drive market leadership and do everything, especially in the esports space where we already are market leaders. Double down and invest as much as we can so that we can continue or increase the lead that we have over any potential competition. And therefore, there have been multi-pronged investments that we have been making, and we will continue to make. Our only fine line is we don't want to power this by burning a lot of cash. We don't like losses, and we don't want to power any growth that is driven by losses. But as long as we're able to generate profitable growth, I think focusing on margins right now would be completely the wrong thing to do for the business from the mid to long term perspective. And that's the discipline we are maintaining.
So you maintain this 12-13% EBITDA margin guidance, and is that the growth numbers that have come in quarter 1, is that symptomatic of what could happen for the rest of the year quarterly as well?
It should. If you see our esports business, the second half of the year is usually much stronger than the first half, and even the Q1, if you see, has grown over Q4, whereas normally because of seasonality, etc., Q3 and Q4 are much larger. So I think it's a very positive trend to see Q1 in absolute terms be larger than Q4, which has not been the situation earlier. So that shows that the health of that business is very good, and it's powering up very well. But even from an overall Nazara perspective, I think this year should be a good growth year for us.
Okay. Any M&A plans? Nitish, you keep on doing those, you keep on evaluating what's in store for FY23?
Absolutely. I think because Nazara has positive cash flows, we are generating free cash flow. We did, I think, about 110 crores or 15 crores, 115 crores last year. This year will be more. Plus, we have about, I think, consolidated at our group level, nearly 700 crores of cash. We are a zero debt company. So we are very well poised to take advantage of the downturn in valuations in the marketplace. I think many good gaming businesses in the various sectors we operate, whether it's gamified learning, whether it's freemium, and potentially also skill-based real money gaming, would be available to us. We are already in multiple conversations and happy to open new conversations as well. And surely, I think Nazara will make aggressive moves in the M&A space. That's something we've kind of been doing for the last 4 or 5 years. It has worked out well for us. We've kind of also learned along the way how to execute it, not only do the M&A, but also synergize, integrate post M&A through our Friends of Nazara network, which is working very well. I think this is a perfect time. This year, FY23, FY24 is a perfect time for Nazara to double down in that strategy.
So strategic game-changing ones, or it's a string of pearl strategy?
It is surely a string of pearl strategy, but I believe you will see increasingly the size of deals increase.
Okay.
As we get more confident about a strategy. We also want to do things that kind of move the needle and make sense from an overall perspective. So while it will be a string of pearls, I'm hoping that the pearls start becoming a little larger.
All the best for that. My final question, Nitish. There's a bit of, I know the matter is still not out there, but there is a bit of a to and fro around the legal framework for gaming and the taxation thereof. What would hurt you the most and what would not from whatever decision comes out?
For exposure in the skill-based real money gaming is between 5 to 6% of our revenue, and even smaller on our profit. So I think from a downside, there's very little downside for Nazara if there was an extremely adverse ruling over there, especially around the GST. At the same time, I think there is huge potential for this industry to grow. And I believe from the noises I've heard and the steps that the government has taken in terms of setting up AVGC task force, etc., that there is overall a lot of support that the government wants to see. India really can become a global leader in gaming because the home market is becoming so large and we can export all of this globally. And as you know, globally gaming is a much larger $150 billion business. I think for India to take any steps that can be, negative towards this industry would not really be the right thing to do. At the same time, if the rulings come in, which are, fair, I would say. I'm not saying there might be some tax increase required, necessary. That's fine for the government to decide. But if it's fair and it sets a base for the industry to grow, then Nazara has a huge opportunity to build on its open play platform and consolidate in the market in a business that has a lot of scale. So while we've kind of stayed on the fence and therefore sacrificed that growth scale that we could have got, we can easily jump in now with the open play that acquisition we did last year and built a platform and consolidate and grow very fast. So I would say we have a lot more opportunity ahead of us rather than downside.
Great. Wish you all the best, Nitish. Thanks so much for taking the time out, and have a great rest of the year.
Thank you very much.
And viewers, thanks for tuning in.
Bye. Thank you.